Good morning, folks. Sorry about all these problems. YouTube has had some issues this morning. Unfortunately, they don't have any alert system. Um, it's just a touchy-feely type thing. I'm using their backup server, and now that's working. Again, thanks for joining for this Trader Bite. It's 8:20 a.m. I'm going to keep this super brief. 8:20 a.m. Chicago time on Thursday, the 29th of October, 2015. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. The news overnight, just basically a reminder that yesterday was FOMC, lots of volatility, and basically on the FOMC saying that the Fed funds rate target unchanged, drops reference to global developments restraining growth. The reference to that being dropped is very bullish. Pace of jobs growth has slowed, also bullish on non-interest rate changes. Eurozone October business climate came in at 0.44 versus 0.31. Consumer confidence came in at negative 7.7 in line. So business climate came in strong. This morning, U.S. Q3 advanced GDP annualized came in at 1.5 versus 1.6%, and personal consumption at 3.2 versus 3.3%. Initial claims came in at 260,000, better than 265,000. Advanced GDP price index came in at 1.2 versus 1.4, slightly weaker. That's on the price index. So that's deflationary, right? So let's take a look at our technical picture here real quick. So what we had yesterday is the expectation that the market will likely trade inside of the composite, this composite micro composite profile with 64.75 likely to be tested. We opened on the edge. The expectation is that the market will likely rotate back and forth, open right here, rotate back and forth until the FOMC, and then what I had indicated was the FOMC target above would be 84.75 right here, and below 45.50. That line's super thick. Let's thin that up a little bit. And so what we had though is we had a pretty strong move off the open. The open was actually an OAIR really open auction in range. We opened just inside of the range, I think. We had a swing up and a swing down. You could see the swing high, swing low there. And then the market had somewhat of an initiative move up. You could see the delta was pretty strong here. It pushed to 79. Recall that I had 75, the 75 area is the initial test point. It pushed to 79, and then we had what looked like a head and shoulders failure, short term, right back into the open, and that worked out completely, almost perfectly. We played around with the opening swing. You could see it playing on the opening swing high and the opening swing low. Then we finally break lower. This area here is where the Fed came out with their announcement, and we finally break lower, and we get right to the point of control, the naked point of control from the prior day, which is a pretty common test. Okay. So with the push to the point of control of the prior day, we hit that to the tick. The point of control is at 55.50. The low of the day, 55.50 right there on a small double bottom. Really nice taper. You could see that as price moved down, the auction was not facilitated. In other words, volume starts to dry up. So this is a dry up push here, retest, and then right back up into the OS, up against the mid. A nice opportunity at the mid, back towards 58, and then from there it started to float up. A second test of the mid is something that I always pass on, and finally it starts to run up. But the morning trade, if we look at the profile on the morning trade, if I was to just profile the first section of the morning, Let's change the, let's make this solid, and you can see that the profile in the morning was very, very thin, and was telegraphing trend. So the point of control in the morning was down here. Then it rushes through, does a little bit of balancing right there, forms this second distribution, and then balances a lot in here with a ton of volume, and builds a third distribution higher, and then comes right down through all those on the FOMC announcement. Very confusing way to do it. But there it is. It's what the market does, and the market does what it does. But overall, what does that mean to us? I have about 4 minutes to the open. What does that mean to us? Let's look at the daily composite just to get a perspective on where we are. If I took a composite, and here it is in this yellow and blue, let's change that to a hologram so that it's not so obtrusive. If we take a composite from the 2117 high all the way through to the current or yesterday's action, the key area below was this right here. It was the 2029 2030, right? This, we've talked about this area quite a bit. 2029 2030. Once the market pushed through on this day, we had talked about the fact that now we're in the upper distribution, and the upper distribution has that 84 as the key area above, and we took that, we went right to it yesterday, and we've tested it. So what we have done is we have recovered the balance area from February all the way through to the end of August where we sold off. So we are back in here. And so what the market is likely to do from here is it's likely to rotate down. So we've come up to and tested the most important price in the area. And once that happens, in general, we pull back to advertise lower, to advertise for more buyers, to accumulate more energy, kind of like inhaling. It has to inhale in order to exhale on the next leg. So it's likely to push back lower before it starts to move. And the normal course of action when we are up against the point of control is we pull back, and then we push through, we pull back through, we trade through it because it is balanced. And then once we have enough accumulated shorts and energy, we start to move up and push to 2117. I want to remind you that yesterday the NQ pushed its all-time high. So the NQ all-time high before yesterday was down at 46.77, something like that. I believe it was 46.77.75, and it made a high yesterday of 46.78 and a quarter. Took it out by 2 ticks. So the NQ is relatively stronger than the ES. The ES is still lagging a little bit behind despite excellent earnings, except of course for Twitter and a couple of others. But overall, we're in this upper distribution. This is, like I said, I think it was early last week. It's really not a good time for shorts. And I did warn that to shorts, those who are short need to either hedge or close their position, because once the market starts pushing like this, especially in an overall uptrend, we'll look at the SPX chart for a second here. I know the market's opening, and I need to go prep for myself. When you look at the overall market action, we are still in a market that's pushing higher. That didn't come out very well. That's pushing higher. We've broken this trend line. We're coming back up to it, and we want to see what's happening once it pushes through it, and it's pushed through it by a little bit, and it's back into this balance zone. I'll leave you with that. The primary hypothesis for today is probably is it's likely to rest. I'm looking for the market to trade yesterday's range and be stuck in yesterday's range. There's a strong potential for a higher high given the way it closed. Anyway, I'm out of time. Good luck. Sorry about the technical difficulties. I'll catch you tomorrow. Take care.